Now, I was breezing through their quarterly report, had some red flags here, guys, but also had some positive things to say as well. Welcome back, YouTube. As you can see, I am working outdoors today using Panera Bread Wi-Fi, so thanks, Panera. Guys, I want to go through Airbnb. You all know it's a stock I'm interested in. Trying to figure out what I think fair market value should be for Airbnb. So, got some pros, got some cons, so let's get into it. 52-week high is $212, 52-week low is $92, and we are at 103.50 right now. So, at an interesting point, we're closer to the 52-week low than the 52-week high. This is definitely a stock I'm somewhat interested in. As we can see here, market cap is 65 billion, call it 66 billion, and almost an 88 PE ratio. Is it worth that premium? We have to figure that out, guys. I think it's very disruptive, first and foremost. I think they have great sticking power, and when I think about a competitive market and the overhead that hotels have, they don't have the customization that Airbnb offers. Whether you're a single guy or gal looking for just a one-room rental for a few weeks, or you're a family going on a vacation in a nice area and want a whole house to yourself, many different ways to book an Airbnb, which I like. The other thing about it is Airbnb hosts can undercut hotels. They can look around the area, see what value is for a night's stay, and undercut the hotels while still maintaining a profit, which I think long term could absolutely disrupt the hotel business. And I think the more that Airbnb is around and proves itself, the more dangerous they're going to become. Another thing I like about Airbnb is people are actually building business models around this platform. They are buying properties and fixing them up just to Airbnb. As a past landlord, I know what it feels like for tenants not to pay rent, and it can get ugly bringing in attorneys, them damaging properties. So the short-term rental where the money is up front, you don't have to worry about credit checks, you don't have to worry about too much, makes this process very interesting. So, there's a lot of things about Airbnb's business model that I like, both from being a landlord at one point and seeing that these short-term rentals, if you're in a good area and you can keep the occupancy high, and you can keep the occupancy rate high, then it could be very lucrative as you are charging a premium. And when we think about a market where the housing market's becoming unaffordable and the rental market's becoming unaffordable, makes you wonder if there is this short-term rental market available for a lot of people that A, work from home, B, can't afford housing right now, and C, the pent-up demand for traveling. So definitely could see the bull case for Airbnb. Now, with that being said, I do see a bear case here, guys. We have consumer sentiment hitting a new low, and this is not even updated yet, but the recent consumer sentiment is extremely low, reading right around 50, and we were at 58, so it's just getting lower by the day. I do think, however, there's a pretty solid bull case for this company, even though consumer sentiment is fairly low. Now, with that being said, we are on the cusp of heading into recession, which could absolutely impact Airbnb's business model. But on the flip side, they are international, and with China reopening, and if we get some sort of settlement with Russia and Ukraine down the road, I could see that the expansion of this company is pretty much unlimited. Over the next 5 years, they have analyst expectations growth rate at 64%. Now, I tend to think that's pretty lofty expectations here, especially when we consider a contraction period in the economic cycle, and we consider that we could be heading into a recession. Guys, I can't be using this type of numbers. I'm going to probably stick to about a 35% revenue, 30 to 35% growth rate. I was breezing through their quarterly report, had some red flags here, guys, but also had some positive things to say as well. All right, guys, what I noticed was, looks like share issuing is an issue here, as this was last recorded on December 31st, 2020, and we go a year later and they added about 5% more shares to the market. Okay, so I'm going to use 35% growth rate, and I'm also going to use about a 5% share dilution rate as well going into the next few years with this company. Okay, a bonus that I see here, ladies and gentlemen, is stock-based compensation has come down pretty solid, going from 229 million to 194. Okay, and here's where we got to get really excited about the company is take a look at international growth here, literally doubling, guys, over 1 year. United States still United States growth slowed down a little bit, but still heck of a growth for United States. But take a look at that international growth, guys. So this company is starting to catch fire globally. That's something we have to keep an eye on. One thing we cannot take away from the company is the top line growth here. 2017, 2.5 billion in revenue to 2021, going to 6 billion in revenue. Kind of an anomaly here when we think about the pandemic, them IPOing during the pandemic. Company is slammed by stock-based compensation and related to initial public offering. So obviously the lower bookings didn't help as well. When we look at profitability, gross margins pushing 81%, guys. That is just ridiculous. EBIT margins pushing 12%, and compared to industry standard, that's a nice edge to have. So as we see here, super clean balance sheet. Now, I took out $6 billion both from debt and cash. Those were holding costs for people that haven't done their overnight visits yet on locations that they've paid for. So I backed those out of the equation here. And when we look at their balance sheet, pretty clean overall. 6.4 billion in cash and about 2.4 billion in debt. The only knock I really do have on the company is the valuation and share dilution. Growth for the top line growth has been sitting right around 37%, so I feel comfortable using 33 as kind of a jumping off point here. And when we compare these earnings to what is expected from the street, expectations are for 2022 to do about 8.1 and 9.7 for 2023, and when we line that up with our projections, 9.7 to be average. Now we can see down here 8.2 and 11.1 seem to be a low and high end. So when we look at our projections on that, we are sitting right in the middle, maybe a little high at 10.5. So I actually might lower this to 31%. Just take off a few percentage points here to make it a little bit more even. So now we're at 7.7, 10, and 13. And when we compare that to analyst expectations, we're at 8.1. So we're coming in a little shy in 2022. And we're coming in a little high in 2023. But I actually like these projections. Shares outstanding are currently at 636, so we got 2 million extra there, so that's almost spot on. So numbers here are pretty much exactly what analyst expectations are and where the company is sitting currently. The EV to EBITDA is trading right around 57.6. Now, that is extremely rich, extremely high. When we look at it from an EV to free cash flow, fairly reasonable overall. Where we can compare this to is this is going to be a tough comparison here, guys. This is where it gets a little difficult. You can compare it to maybe a Marriott. Marriott trades from an EV to EBITDA of 23. Hilton trades at an EV to EBITDA of 25, call it 26. So we're looking at about a 25 to 26 EV to EBITDA for the hotels. I'll use a 30 EV to EBITDA multiplier here. Now that puts us at a price target of about 158. And if you guys know, I said anything under $89 seems to be a pretty fair, I think a fair entry point for the stock. Obviously, this is not financial advice, guys. You have to do your own due diligence. But this is my personal watch list, and I think, I think it gets interesting around these price points here. Now, the question becomes, can it trade for a higher multiple? Maybe it trades for 35 times EV to EBITDA, right? And maybe it does grow revenue at 40%. If that is the case, guys, you're looking at a $220 stock, and a buy around $97 makes a lot of sense. But for me, I'm going to be super conservative. It's my dive in, guys, to Airbnb. I really think depending on how aggressive you want to get with your expectations, the stock here could absolutely be a $200+ stock. I think it's sitting right around $100 is pretty interesting, because if it does break down to these low 80s, mid 70 point, I think at this point I'd be reevaluating I definitely would be reevaluating what they're doing internally. Are they diluting more? Is the business growing both domestically and internationally? What can we expect? Going forward, how does the balance sheet look? Are they taking on more debt? Are they paying off debt? Is their cash position growing? So I think on this one, guys, it's really interesting to kind of sit back and see if the price keeps breaking down and maybe get closer to that $80 to $70 range there, between $70 to $80 range. I think it'd be pretty interesting to sit back and see if it gets those points, because I think I'm being pretty being pretty fair with my projections here, saying that, you know, $149 to me could be the low end of this stock, and I think 220 could be kind of the upper echelon to this stock. So, you know, I think building a position in the $80, $70, $80 range could make a lot of sense for this company. But this is just my opinion, guys. Once again, this was just a dive into Airbnb, so hopefully you all enjoyed that. As always, guys, appreciate your time. Thank you so much for spending it with me, and we will see you next time, investors. Peace.